Okay, so let's continue with question 19. Okay, we solved questions 5, 10, 11, and then 15 in our previous video, right? So let's continue with question 19 and look at what we have here. Question 19. So question 19 says, okay, so let's write question. So let's write question 19. Question 19, okay. So question 19 says, cocoa purchased, so as we are reading, let's underline key stuff, right? So it says cocoa purchased 1,000 units of inventories for 100,000 Ghana cedis and incurred freight charges of 10,000 cedis, right? So the cocoa purchased 1,000 units of inventories for 100,000 cedis and incurred freight charges of 10,000 cedis. Now, freight is like transportation, okay, that by air, through the sea. It's like transport charges, right? That's the freight charges. During the year, the company sold 750 units at 150 per unit. At the end of the year, 50 units of the closing inventories were damaged. It is estimated that the damaged units can be sold at 25 cedis per unit, and the remaining undamaged closing inventories can be sold at 150 cedis per unit. At what amount would the inventories be recorded in the financial statement or the financial position as at the end of the year? Right, so this is a simple question. Very, very simple question. Okay, so we just have to note what will go into the computation of cost, right? We're told that they purchase the inventories for what? 100,000 cedis. Freight, 10,000 cedis. And you know freight charges or transport. The standard says it should be included in the cost of the inventory, right? So we just have to include the cost in the books and then we value it. That is it, right? So let's continue as simple as that. So here, what we have to do is we have to look at the cost of the inventory first, right? We have to look at the cost. The cost is given, but you see, we're told that the purchase, so what's the purchase price, right? So looking at this, we have the purchase price to be, and then once again, let's add the Ghana cedi sign up, okay, so that we know our workings are all in the currency provided in the question. Okay, so let's bring this one here. Okay, so I have this one here now. Now, the purchase price in the question, right? The question said the purchase price, they purchase it for what? 100,000 cedis, right? They purchase it for 100,000 cedis. Okay, so if they purchase it for 100,000 cedis, right? As we have here, then we have to include the freight. I'm following, because that's like a transport. So the standard said we should add freight, right? As part or transport. I said it's like transport, like transport cost, right? The standard said we should include in the cost of what? The inventory. So we add the 10,000, right? Then this will now be the cost of what? The inventory, right? We'll now get the cost of the inventory. So 100,000 plus 10,000 gives us, so we have cost of inventory now to be 110,000, right? So 110,000. So this is the cost of the inventory now. Okay. Now this 100, this figure here, right? This figure here, this total cost of 110,000 cedis here is the total cost of all the inventories. Is the total cost of the what? The 1,000 units, right? That was purchased. So let's get the cost per unit. Okay. So let's get the cost per what? Unit. So if you want to get a cost per unit, what will it be? So cost per unit of the inventory, right? And that would be the 110,000, right? Then we divide it by the 1,000 units. Are you following? We divide the total cost by the 1,000 units, and that will give us 110 cedis. So 110 cedis per unit. So this is the total, the cost per unit of the inventory. We've not done anything. Don't forget that we said that the inventory here, we had a purchase price to was 100,000. Freight charges 10,000. The standard service, you add freight charges. You add and you get what? This figure, right? 110,000. Then we divide by the number of units, and that gives us what? 110 cedis per unit. So this is the cost per unit of what? The inventory. So now let's go and then value stuff. Now, how many, let's come back here. How many units were bought, right? They bought 1,000 units. Coca Limited purchased what? 1,000 units, right? But this, during the year, the company sold seven, you see what they sold? They sold what? 750. So if they sold 750, then how much will be in the inventory, right? How much will not be sold at the year end? 250 will not be sold at what? The year end. Are you following? So 250 will be the value of closing. I mean, it will be the number of closing inventory. So I'm going to have 250 units as the closing inventory because that's the number that has not been what sold, right? Very good. So don't forget that. Okay. Don't forget that. So now let's continue. Let's continue. So the requirement says we should find the value of the what? This is that what value would the inventory be recorded in the financial position? So the closing inventory, what value do we attribute to it? Now we're told that at the year end, 50 units of the closing inventories were damaged. So out of the 250, 50 was damaged. So if 50 is damaged, then the 250 will not be, sorry, if out of the 250, 50 is damaged, then the 200 will not be what? Damaged, right? So you have to value the damaged, the 50 that's damaged, separately from the 50 that's damaged. We have to value separately from the 200 that's not what damaged. And I'm saying if we have 1,000 units of inventory, right, and then we sold 750, then we'll be left with 250 as closing inventory. And even from the 250, from that 250, we were told that 50 was damaged. So 200 will not be what? Damaged. So we have to value the 50 separately. We have to come and value the 200 separately. We put the values together, and that will be the value of inventory. Right? So let's look at the damaged. How many? So let's come here and continue our workings. Right? So let's look at the damaged inventory. And then we said with the damaged inventory, how many units? We said 50, right? So let's value these 50 units. So this 50, let's value it. What will be the cost? Right. So let me underline this one, or let me bold in it, because we are valuing the damage. So with this damaged, what will be the cost? Then we compare with the NRV. So the cost of this 50 will be, as you know, cost per unit is 110, right? Times how many units? 50 units. So multiply, and then the damaged 50 by 110, that will give us 5,000, 5,550, right? Okay. So this is the cost of the damaged inventory. Then let's get its net realizable value. The net realizable value, we're told that if you come back to the question, right, it says 50 units were damaged, right? Then they said it's estimated that the damaged units can be sold for 25 cedis. And then the undamaged for what? 150. So this one is damaged. So we can sell it for what? 25 cedis. So that'll be 25 cedis times 5. Oh, sorry, here's now 500 by 50. Okay. Then we'll multiply the 25 by 50, right? By 50, and that will give us 1,250. So this is the net realizable value for so this is the NRV here. This one here is the NRV for the damaged inventory. This is the cost for the damaged inventory. So if you should compare the two, right? If you should compare the two, which one is the lower of the cost and NRV? So which one? So you realize that the value will be the lower, right? So our value will be the 1,250, right? So this is what we are going to record in our books as the value for the damage. So we've worked the damaged, we've compared the cost of the damaged with the net realizable value of what? The damaged. Then let's go and look at the unit that's not damaged. So with the undamaged, okay, with the undamaged inventory, how many units? Set 200 units. Don't forget that, right? And the undamaged inventory, we have 200 units, right? And you should know why. You know why we have 200 units? It's very simple, because we had or we purchased 1,000 units, we sold 750. So if we sold 750, we'll be left with what? 250. And out of the 250, 50 is damaged. And we value the damage separately, so they are undamaged, right? So cost, what will be the cost of the undamaged? How many units were not damaged? 200. By what is the cost? 110, right? So that will be the 200 units by 110 cedis per unit, right? And that will give us 2200. So we have 22,000, right? So 22,000 is the cost of the undamaged inventory. Okay, just multiply the unit 200 units by the cost. And let's get the NRV of the, so NRV of the damaged, sorry, NRV of the undamaged. So undamaged, we still had 200 units. Then it said, what's the selling price per unit? We're told that the undamaged can be sold at what? 150. So this must be about what? 150. Be very careful. If you come here, if you come and check the selling prices here, right? This 25 cedis here is the selling price for the one that is damaged. And this 150 is the selling price for the one that's not damaged. So if, as we were valuing the what? Undamaged, right? As we were valuing the undamaged, this one, as we were valuing the undamaged, we have to use what? the 150, right, as the selling price for the undamaged. And then the damaged, we use what? The 50. Don't forget that, right? Okay. So let's continue. So multiply the 200 by 150, and that should give us a figure like 30,000, right? So it should give us 30,000. So cost 22,000. Cost 22,000, NRV 30,000. So which one do we use? The lower. What's the value? So value of inventory, you have to use the lower, which is what? 22,000, right? 22,000 is the value that we have to assign to the undamaged inventory, right? So to get the total value of inventory, it will just be the damaged plus the undamaged. The undamaged was valued at the undamaged, right? We are valuing it at this figure. Then the damaged, we are valuing it at what? This figure, right? So we have to just pick the two, sum them together, and that will be our value, right? So this figure here, 22,000 for the undamaged, and then the 1,250 for the damaged, and then that'll be a total value of inventory, right? So as simple as A, B, C. So total value of inventory will be equal to the 1,250 plus 22,000, and that will give us, so we say we are adding the 1,250 plus 22,000, which should give us 23,250, 22,250. So this is the value that we have to record in our books as the value for the closing inventory, this figure here, right? That's the value that we have to record in our books as the value for our closing inventory, 23,250. So we'll look at how we value them. It's very simple, right? So first of all, we had to get a cost. We added the freight charges, we got a cost. And then out of the 1,000 that was purchased, 75 was sold. So 250 was left in inventory. So we value the 250, and 250 out of the 250, 50 was damaged. So value the one that's damaged separately. And then come and value the one that is not damaged separately. And then you add the two. Okay. And that will be the answer. Let's try question 7. So that was, we solved question 19. Okay. Let's go and try question 7. Okay, so with question 7, okay, also a very nice question. Very, very nice question. So let's write question 7 here. Okay, so it says S&M Limited has the following products in its inventory at F23. So we have Ahumka completed 5,400 units, cost per unit 22 cities. Then Adonko part completed. So the part completed like the work in progress, WIP, And then the ahumka completed is what? The finished goods, right? So we have this. Each product normally sells for 34 cedis. Due to difficulty trading conditions, SNM intends to offer a discount of 15%. So the normal selling price is 34, but SNM intends to offer a discount of 15% per unit and expects to incur 4 cedis in selling costs. So cost to sell is 4 cedis. 10 cedis per unit is expected to be incurred to complete each unit of what Adunko. So this 10 cedis here is cost to complete. Don't forget that. Cost to complete. So in this case, you have cost to sell 4 cedis per unit and then cost to complete 10 cedis per unit. Right? And we said cost to complete applies for only work in progress. We are going to use the 10 cedis only when we are working what? The Adunko. Yeah. We use it when we are valuing Adunko. Right? The 10 cedis. Because we said work in progress applies to only what? Sorry, cost to complete. Cost to complete applies to only work in progress, right? And the finished goods are already completed. So if it's a finished good, then we are not going to factor in the cost to complete when we are valuing finished goods. And so we only factor in cost to complete when we are valuing work in progress. That's cost to complete, right? So let's value them separately. Let's start with the first one, which is ahumka, right? So let's start with this ahumka. Okay. So it's PE. Let's start with the ahumka, right? Let's value ahumka first. Then we'll come and work on adonko, right? So with ahumka here, right? Now let's look at this. So ahumka, what's the cost? So let's value it. Let's get it cost. The cost is, so here I'm just getting total cost. Okay, you can do it the individual way, but I'm just, so 5,400 times 20 what? 2, right? So time by 22, and then that will give us, we have 118,800, right? So again, this is the okay, so I'm just adding my Ghana city sign up here. Okay, so this is the cost for the ahumka, right? Then let's see the net realizable value, the NRV of ahumka. Then we compare with the lower. So the NRV, now the selling price is what? 34 cities, but they said they are giving a discount of 15 what percent. They intend to offer a discount. So if you take the discount of 15%, what are you going to have? So we can also do it this way. Let me use this one to write here. So we have 34 cities, right? That's the selling price. But there's a discount of what? 15%, right? So just multiply the 34 by 15 to get a discount percent, right? So 34 by 15%, what do you get? Let me erase this one first. And then draw again. So 34 by 15%. If you pick your calculator and multiply, right, you get something like 5.1. So this is a discount. Okay. So the selling price after the discount will be 34 minus 5.1, which will give us 28.9. Are you following? So 28.9 will be our price after what? The discount. So our price that we'll be using will be 28.9. Are you following? Even though it was 34 cedis, right? But a discount of 15%. So multiply the 15 by the 34 points. Multiply the 15% by 34.9 and you get 5.1. And then when you take 5.1 from 34, okay, when you take 5.1 from 34, you get 28.9. And the 28.9 is the price after the discount, right? Or you can do it this way, just pick 90%. I'm sorry, if total percentage is 100% and discount of what? 15%. Then if you take the 15 from 100, you get 85%. So just do it like this, 85% times 34. Do it and see. 85% times 34. You realize that you come and get what? The 28.9 straightforward. Come and get this figure, the 28.9, right? So what I am driving at is that the 34 cedis is the price before the discount. So just deduct the discount, that's all. Pick your calculator, find 15% of the 34, get a discount. When you get the answer, deduct from the 34, then you get the price after the discount. Or you can just punch 85% of the 34 cedis, right? So deduct 15 from 100, right? Then you get 85%. So 85% times, that's 0.85, right? Times your selling price times the 34. So 0.85 times 34, right? And that'll give you the 28.9 straightforward. So 28.9 is what I'm going to use to do the computation, not the 34. So watch out. I'm going to use 28.9 straight out or throughout. Good. So NRV, let's come back here. So we are going to have bracket 5,400 times the selling price, 28.9 cedis. And then that will give me, or that will give us 156, 960, right? Then, so this is the sales value. So then let me bring this one down here. So let me do something like the selling price. So this is the selling price. Then we said we are going to less, we are going to less the cost to sell, right? So the cost, let me just make it cost to, and then sell, okay? So the cost to sell, that will be is per unit, so you have to multiply, okay? If it's not per unit, don't multiply. So that'll be 5,400 by 4 cedis. Cost to sell is 4 cedis per unit, right? And that will give us 21. So that gives us 21,600. And then here we are deducting this figure, okay? I said Ahumkan, this Ahumkan is completed, it's finished good. So if it is finished good, then we are not going to factor in the cost to complete. The cost to complete applies to only work in progress. I'm sorry. Yes, the cost to complete applies to only work in progress. That will be the Adunko, right? So we just underline this one here. We deduct, and then what do we get after deducting? We will get 134,000, 134,460, right? So this is what we have. So this is at the NRV. So we compare this NRV here with the cost here. So comparing these two, which one do we use as the value of inventory? So comparing the two, the value of inventory will be the lower, right? So what's the lower? The lower is the 118, this figure, 118,800. So this is a lower. So this is a value that we are going to record for Ahumka, right? That's the value we are going to record for Ahumka. Very simple. We said just compare your cost to your NRV. The cost is this one. This is the cost, right? Compare with the NRV, and then you are gone. Then somebody can do it this way. Somebody can also do it this way. you still get the answer. For the NRV, somebody will do this way. Will pick the selling price, right, which is the 28. Somebody can do this way. Let me write it here. So the person can pick the selling price, right, which is, let me use this one, which is 28.9, right? Then we'll less selling price minus cost to sell. Cost to sell is what? 4, right? And then we'll multiply everything by what? 5,400. You get the same answer. If you like, try it and see. So 28.9, which is the selling price minus 4, and then multiply by what? Your 5,400. You should get the same 1/3 this figure here. You should get the net result. You should get this one here, right? You should get the same thing here. 134,460. Okay, so you can do it that way for the net realizable value. Okay, so let's continue. So we are done valuing so we are done valuing the Ahumka. Let's go and value Adonko. Okay, so with Adonko is work in progress. If you know, Adonko is work in progress. So let's come and value Adonko. And we said Adonko is work in progress because it said partly what? Completed. So with that one, we have to factor in the cost to complete. With that one, we have to factor in the cost to what? Complete. So Adonko, let's start. Let's get the cost. So with Adonko, we have the cost to be, what's the cost of Adonko? Is 26. So that would be 2,800 times 2,800 times 26, right? And then that will give us 72,000 72,800. Okay, then let's go to the net realizable value. So we have the cost. So with the NRV here, so let me even bring everything down here. Okay, so with the NRV here, we have to get the selling price or the sales proceed or the sales revenue, right? How much do we get from selling? And that would be 2,800 multiplied by the selling price, 28.9. Now, watch out. There's something very important that you need to know about work in progress. I've said something about that in the previous video, but you see, the 34 cities, let me say we've factored in the discount. So the 28.9 cities, that's the selling price, the 28.9 cities. It's the selling price for the finished goods. But look at something. You see, for Adonko, immediately we factor in the cost to complete, right? It means that we have converted it from work in progress to finished goods, because immediately you add the cost to what complete, you have changed it from work in progress to finished goods. So you can now value it using the selling price of the finished good. Be very careful. You see a question where sometimes they can give you the work in progress and they will give you its selling price. So this question that we are solving, for instance, we have this question like this. We don't have the selling price for the Adonko here, okay? But in case we have the selling price of Adonko, right? We have its selling price, and we also have cost to complete. Immediately you factor in cost to complete, you will not use the selling price of Adonko again, or the selling price of the work in progress. Immediately you factor in the cost to complete, you are changing it from work in progress to finished good. And therefore, you are not going to use the selling price of the work in progress. Very important. I said again, immediately you have factored in cost to complete, you are changing the work in progress to finished goods. So you are not going to use the selling price of the work in progress if you are valuing, or if you want to get the net reliable value of the work in progress. Probably if you don't have any cost to complete, right? If you don't have cost to complete, then probably you can use the selling price of the work in progress to get it NRV. In that case, there will be no cost to complete. But so far as there's cost to complete and you have factored in cost to complete, we are changing the work in progress to finished goods. And therefore, we have to use the selling price of the finished goods to value the work in progress. That's why with the raw materials, we don't normally use selling price of finished goods to value the NRV. But with work in progress, we use the selling price of the finished goods to get its net realizable value, because immediately we bring in the cost to complete, we are changing it to finish goods. So very important. That's why this work in progress, we are using the selling price of the finished good to value the work in progress. Okay. So we have 28,000 by this, and then that gives us 80. So we have something like 80,920, right? If I'm right. So 80,920. Then cost to sell, cost to what sell here to 2,800 is per unit. So we have to multiply times what's the cost to sell? 4 cedis and 4 cedis to sell. So 2,800 by 4. And then that will give us 11,200. And then we have to deduct this one as well. 11,200. Then we have cost to complete. I said this is cost to complete. This is finished good. I'm sorry, work in progress. Okay. Adonko is work in progress, so we have to factor in the cost to complete to change it from work in progress to finished good. And then that one is 10 cedis per unit. So we will get 28,000. We less it. And then we less everything with the NRV. Let's see what we get. So we are going to have 80,920 minus 11,200 minus 28,000. And that gives us 41,720. So this is the NRV. So comparing the NRV with the cost, which value do we use? So the value should be the lower, which is 41,720. So this is the value that we are going to assign to Adonko, which is work in progress, partly completed. Okay, so when we are done, and then the same thing here, somebody can also do the same thing, right? When valuing Adonko here, can just pick the 28, okay, the price, which is 28. Let me wipe this one before I write. Okay, so somebody can do it, also do this way. We'll pick the selling price, which is 28.9. Then we less cost to sell 4 cedis, we less cost to complete 10 cedis, right? So we'll deduct this 28.9. Then we less the cost to sell 4 cedis, cost to complete 10, right? And then when you get the answer, we come and multiply everything by what? 2,800. You can also get the net realizable value using this formula, right? So here, what I did here, this one was just a total. Okay, I use a total of this. So everything is total. Selling price is a total. Cost to sell total. Cost to complete total, right? But you can do it individually. Just pick 28.9, deduct the 4, right? And deduct what? Your 10, and come and multiply by the 2,800. You still get this figure, 41,720. So somebody can also do the NRV this way. Okay, somebody can do the NRV this way. Okay, so that is that. So now I'm sure we can sum them up. So let me wipe this one, then we sum them up. Okay, so we can sum the two, and then we have the total value of inventory, right? So total value of inventory will be equal to, we said for this one we use 118, and then this one we are using 47. So that would be 118,800, then plus 41,720. Okay, so we sum everything and then we get 165. No, it's supposed to be 160,520. 16520. So this is the value of inventory that we are going to record in our books. Very good. So this is question 7. Let's look at question 4. Okay, let's see the number of questions we solved. 15 was in the other video. So here we solved question 19 and then 7. Oh wow. Okay. So let's pause the recording here. Or let's pause the video here, and then probably we can continue and solve more in other videos, right? Okay, so I'll see you in another video where we continue and solve more questions. So that the right thing to be an accounting expert or to really understand FI and the standards, you have to practice and solve more questions, right? So that's exactly what I'm doing. There's one question here, question 4, which is it's also a very nice question, question 4 here. So we'll solve this one probably in the next video. And then question 9. And then probably that'll be fine. Question 9. Yes, this question is also very, very solid, right? So we'll solve these questions in the next video. And then that'll be it, right? So I'll see you in the next video.